Hello, everyone. Welcome to number 4 in our short mini series on candlestick patterns. Today, we're talking about a shooting star. My name is Barbara Armstrong. I'm a coach with Charles Schwab. I invite you to follow me on X, my handle at Barbara Armstrong CS. So just before we get into the land of shooting stars, know that everything that we discuss in this short video is for general information purposes only, not to be considered an individual recommendation or endorsement of any particular security, chart pattern, or investment strategy. We're using the paperMoney software application on the thinkorswim desktop platform, which is for educational purposes only. Okay, let's look at our shooting star. And here she is. This is a bearish candlestick pattern. And what makes this or qualifies this to be a bearish pattern? Well, it's a potential reversal signal that appears during an uptrend. And it's a sign that this uptrend may be drawing to a close. So when we look at the body of this candle, it's going to be small. It can be black or white. There will be very little lower shadow or tail at the bottom, and then there will be a long upper shadow that's at least 2 times the length of the body of the candle. It will open near the low of the day. It will rally throughout the day, and then the sellers will come in and bring the price back down where it will close back near the low of the day. And this is an indication that this uptrend may be coming to a close. So it could be, the beginning of the flag part of a bull flag. It could be, something bouncing off resistance in a sideways trend, or it could be the beginning of a longer term trend reversal. For confirmation, we're looking for the next candle to close below the body of that shooting star. So let's go out and look at a couple of charts. So here is MetLife, and if we look at a slightly, longer time frame, we can see that this stock had been uptrending, came up and hit a high, and then it pulled back and came back up close to this former high, and we see this shooting star pattern. And then it pulls back the next day, and the next day we have our confirmation in that we have a close that is below the body of our shooting star candle. If we wanted to see another example, we could come and look at Newmont. And when we look at Newmont, and again, if I come out to a longer time frame here, we can see that this stock had certainly been uptrending. It had come up, hit a high, and then the next day we get this pattern. And you might say, hey, the last session you talked about an inverted hammer. This looks a lot like that. Why do we call this a shooting star? Well, because it is occurring at, it is signaling the end of an uptrend, where an inverted hammer we would see at a support level, indicating that the pullback might be complete, such as we see here. So, that's the difference. Sorry, I didn't do a very good job on my little. So that's the difference between inverted hammer, indicating perhaps the end of a downtrend, and shooting star, indicating perhaps the end of an uptrend. And did we have confirmation? The next day, it certainly closed well below the body of the candle from the day before. So that is the shooting star, my friend. Stay tuned for the next candlestick pattern coming right up.